So can you guys, I'm sharing my screen. My screen. You can see the slide that I'm actually showing here, right? So today we want to go deeper on what actually drives the retail companies. Just in brief, in brief, and then from there we're gonna go and analyze the balance sheet and the cash flows for Mr. Price, and yeah, and then have a final conclusion. What do we think about this business? Is it a good to buy or bad to buy? Is it a good business or a bad business? So here we don't say buy or sell, but we can just say a good business or a bad business. So on this screen, guys, actually this is their financial year for 2019, right? Guys, am I talking alone?
We hear you.
Okay, so these are their financial statement for 2019, just a financial report. So I just want to start by going through their financial report for 2019, their presentation, just to see how things are going. So we can see, so usually companies, when they're doing their analysis, they do, most of them, they do a little bit of top-down analysis, because big companies, they kind of like affected by the economy a lot. If you're a big company, consumer behavior, it really affects your way your business grows overall. So you're not immune to economic performance. Kind of like different from small companies, whereby they can able to, if their strategy are doing very well, they can able to survive the market even if the economy is doing badly. But for a very big company, when the economy is doing badly, especially when their sector is being affected overall in the economy, they also take the punch, right? So then we can't be doing an analysis, right, isolating the company from the overall economy. So yeah, I think it's very important to understand. Last year, they were giving a breakdown on how basically the economy is performing, because remember, a retail business is highly driven by the consumer spending. So consumer spending is very important for a retail business like Mr. Price, and also take into account their market share, especially the people who are actually at the bottom. You know, if there's a reduction in consumer spending, it means that these guys, they're gonna get less revenue, right? So I want us to have a discussion about how are these parameters have an impact to a retail industry, particularly Mr. Price. How does it have an impact to Mr. Price? I don't know, guys. What do you think about GDP growth? Does GDP growth have an impact to companies like Mr. Price, or if it does, how does it affect these companies, positively or negatively? So be ready to reply. I think you're 5 of you guys. Who is D?
D is in India, I think.
Okay. Yeah. So guys, let's see. Let's analyze.
Are you guys able to use your mic, Lebogang?
No.
You're on. Okay. I think some don't have the audio, so we can just continue. Yeah.
Okay. Who doesn't have the audio?
Lebogang doesn't have audio. He said mic not on.
Okay, great. So we can see that, okay, fine, the unemployment rate, it does affect a bit, because if there is high unemployment rate, which means there's a lot of people who are unemployed, and a lot of people can spend money on, buying products and stuff. So it really does affect the business, the retail industry. consumer price index average 4.2% increase. So it means that if there's increase in consumer price, and there's increase in consumer prices generally, but salaries are not actually increasing, which means right now your amount of money that you have, it can buy less compared to actually last year, right? So it also does actually affect the spending behavior for clients. Exchange rate average rand 14.01. Actually, to 2018, this was like a bonus because right now the rand is shooting to 19 rands. But actually, it also does affect, you know, because remember, some of these guys actually do buy these clothes from China and Europe and stuff. That do import these clothes, and they pay this price in actually US dollars. So which means they have to buy US dollars, and then they resell their products in rands in South Africa. So which means a stronger rand it's a benefit for them. But if your rand goes weak, it means it's become more expensive now to buy US dollars, which they are using it to buy their inputs or to buy their stock. So we can see that increase in exchange rate may be a very, very, very big impact for the company. And then as unsupportive economic sector, low business confidence, 2018 showing retail sales. So retail sales, they kind of like increased by 3.3% first quarter, and then in 2019, and then 2018, it increases by 6.5%. So which we can see that in 2019 there was a kind of like a low increase in the retail um, um, selling of products, and then load shedding impact 7 to 10% of tradable hours lost in 2019. So we see the effect of load shedding. If there's load shedding, guys, there is no business, and if there's no business, there's no revenue. And if there's no revenue, there's no profit. Literally, just like that. And load shedding really affects how business operates a lot. Because if there's load shedding, it means you're closing all your shops. The customers who are coming in can't buy anything in that particular shop. It means in those particular hours, there's no business. And you remember, if you lose like 10% of your hours, probably that's where you actually get your profit. So it means that load shedding is really dangerous for businesses. Very
So
dangerous.
don't you think these such companies should opt for renewable energy, like your solar systems, because they're gonna operate and they want to operate for throughout the whole year, and this load shedding issue seems to be persisting. It's just on hold now because of the trying time that we're in, but after this, I think it's just gonna continue. So I think they should opt for renewable energies. That's just my opinion.
Yeah, I actually think so as well. I think my personal capacity, I think companies should actually go for renewable energy, because here's the thing: the reason why right now we've got load shedding because many companies are actually closing, so there's no high demand for electricity.
Yeah.
So if things goes back to the normal, load shedding is keeping going to be a crisis. So if you want to keep up, you're gonna have to find a backup plan, right, for your shops. And remember, for companies like Mr. Price with a huge footprint, right, in the economy, it's actually costly for them to cater all those outlets, right? So it also increases their cost of selling these guys, but it's gonna be a very better alternative for them. Actually, it's gonna be a very better thing to do for them to find ways to actually fight this load shedding thing. Now, um, now these things also they do affect the consumer behavior. As you can see here, we've got petrol price increase. These guys they are heavily in logistics. It actually increased the price of the cost of goods, right? Price of electricity household expenditure. We've got disposable income, right? Disposable income. You see, the disposable income for last year, for 2018, was plus 1.5%. The reason why they're doing this analysis is it's a retailer. So, and it's a big retailer. So what happens is, if there's less increase in disposable income, it means people have got less money to spend. Hence, even in their shops, it indicates that the people demand less from their shops. You know, if people get paid less, people don't gonna think of buying clothes. Or even if they're buying clothes, probably they're buying even like one shoe or one trouser and something like that. So the less the money is there to dispose, the less these guys make money, right? So if you see how retailer actually works, they're actually driven to some extent by how consumer spending behaves, right? Real wage growth, right? You see now, the real wage growth is actually 0.0, right? What this basically tells you is like that there was no wage growth at all, right?
Okay.
In the economy. So there is nominal wage growth and there is real wage growth. Real wage growth, we are subtracting the effect of inflation, right? So if you're taking into account inflation rate, actually tells us that the salary that people were earning in the 2017 is the same as the salary that people were earning in 2018. Actually, 2018 and 2019, the salary is the same. There was no wage growth. And if there's no wage growth, but there's price increase in petrol and electricity, right? And even in other products, it means that now people have got less money to spend on luxury products. They've got less money to spend on clothes, because now most of their money is going to electricity, most of their money is going to rent house, most of their money is going to petrol, right? Which means people are left with a little money to spend on grocery. And that data, it reflects in Mr. Price, because that money that left for disposable income, it's less. So which means people will demand less of Mr. Price goods. It means Mr. Price will have less sales. And less sales, it means that they're going to have less profits, right? And remember, at the same time, Mr. Price, they're incurring a lot of fixed cost because of this electricity thing, because of increase in petrol price. So it makes business difficult for them in overall. That's why it's very important now to see that companies, they literally thrive in economies which are doing good, because of these are some of the reasons why in a very difficult economy, companies is very difficult to thrive. So that's why in South Africa right now it's becoming so much difficult for companies to actually have profits because of such kind of things, because it's not working for them. So when the investors are seeing the economy is going this direction, their next option, they pull out the money, all right, out of the economy. What do you mean by pull out the money out of the economy? They start selling their shares, offloading their shares, and moving their money to other countries. And what it means is, now on the market, there's high supply of shares, less demand. And what does that mean? It means that share prices are collapsing, is what we've been seeing on JSE for the past 3 years. That in most of the companies, from property companies, retail companies, banking sector, the industry is being, all industries being hammered. It's a sign that there's a flow of capital out of the economy, because companies are selling off their shares to put money somewhere else. And when that happens, know that it's not conducive for business to run in that particular economy, and we are heading for a disaster. So I believe you guys, you are leaders, some of you are politicians, you're hearing what I'm saying. So start doing the right things.
We don't have the power.
No, we do have the power. Right? So now, guys, it's very important that when you're doing analysis, especially in retailing industry, these are important things to look at, especially when you're dealing with bigger businesses. Smaller businesses, once again, they can able to do extremely very well without the economy performing very good, right? Because their effect, it's like you're dropping in the ocean. You can expand a bit, but if you're the biggest guy in the ocean, now it matters how big is the space, you know, that you're playing around in. So that's the concept. Now, and the next thing that now you're going to the how the company performed, just an overall overview. The revenue go up by 5.8%. EBITDA, I hope you guys know what is EBITDA. I'm gonna explain a video a bit about what is EBITDA. Earnings before income, tax, depreciation, and amortization, right? And we're going to explain how EBITDA is one of the most important factors to look at in the company. We want to look at the earnings for the company before, you know, we take the taxi and the depreciation and the likes. It actually allows you to have an understanding about the real growth of the company. And then we go into profit after tax, 30 billion, right? So, guys, tell me something. The business had a revenue of how many? 22, right? The business revenue of about 22 billion. The profit of the business, how many? 3 billion, right? Which is, for a retailer, it's not great, but it's not bad. And the profit is 7.2%, profit after tax. Operating margin is 17.6%. Diluted the headings per share is 7.2%. Dividend per share is 6.2%. So guys, this company was one of the best actually. It was one of the best. Their fundamentals, they're
May I
good.
ask something? Their profit after tax, how did they calculate the percentage? Because I'm getting something like 13%.
You're getting something like 13%.
Compared to the revenue, unless if that's not how it's calculated.
So profit after tax, this is growth rate.
Oh, okay, it's fine.
Yeah,
continue.
yeah, it's not margin. So operating margin is this one, 17.6%.
All right.
So try to take 4.3 and divide by 22.6.
Okay, yeah, let's move forward.
Okay, or let me move on. And then we do have very interesting things to look at in here. So they're just comparing 2018 and 2019. You know, I think you can just go back and we have a revision here on your own. I don't have much time to go in details to explain to you what happened here. But yeah, as you can see, in 2018, we did have a plus 8%, right, increase in revenue. In 2019, in revenue. So 2018, we've got this actual, this is the annual one, this is the quarterly. So it's first half, second half, right? And this is and then we also look at that from the EBITDA, 6% here, right? In 20 years, EBITDA, we got plus 6%. Increase to 4.3 billion, and then in 2018 we had plus 22%. You see the difference, guys? It's huge. So this business was doing very well in 2018, and as I'm telling you, the reason why this business is performing badly in 2019 is because of the economic conditions, and partially it can also be changing in customer behavior. That's what as an investor need to understand and establish. Is it changing in customer behavior, or is it changing in economic conditions that is causing this company to perform so badly? Now, guys, there are quite a lot of things to go through, a dividend per share, but here in terms of finances, right? I'm just want to go and look at this one, from finance 2024. to see a 5-year average growth rate. Can you guys see this, the screen I'm sharing now?